Earnings help push the market up, but can it hold these levels? Riz and I are going to talk about it. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our Elite webinar. Now, before we do anything, if you haven't done so already and you haven't hit that like and subscribe button, then I don't know what you're doing, because you are going to want to do that, because you're going to need to get all of this information to learn how to be a better trader and understand what is going on in the markets. Because I've got Riz Mem on with me tonight. How you doing, brother?
Doing good, Chris, yourself.
I am doing great. It is so good to have you back on the show tonight. We definitely missed you last week, but I'm glad you had some fun times. But yeah, man, it has been a pretty big green week, to say the least. Obviously, we started here with Monday, big, nice, big move up, and through the week we were just kind of fighting with this 5,200 level until finally we busted through it on Thursday. Friday, a little bit of an indecision candle there on Friday. If I zoom in there, you can see that's quite the doji candle there, holding up right above our trend line that we were holding for quite some time. So, Riz, I mean, there weren't any big major economic announcements this week that I recall. So is it just earnings that's pushing the market up at this point?
Yeah, earnings, it's kind of like that dip buying mentality came in strong at that 5,000 level, as you can see in hindsight, of
Yeah.
course. But yeah, that was kind of the sort of the pullback, to the extent of the pullback, I should say, from the 5250 area, which we're pretty much almost back to, as you mentioned, that doji kind of signaling some uncertainty. But yeah, pretty big run up, if you ask me, just from that 5,000 level, quite strong. Definitely pertaining to earnings. That a big, I would say, reason for this. And of course, some of the macro data coming in decent. Again, I wouldn't say it's in any particular um direction. It wasn't all bad, it wasn't all good. So I would say, all things considered, you take all these ingredients, mix it in a pot, and you got something half decent. So that's kind of the situation we are in, especially as we come into, we're going into June, which June is the end of Q2, right, Chris? Like,
Oh yeah, it is.
oh
That's
my
crazy to think about.
God, bro, like we're in the middle of May. Wow, it's like every time I come on, it's like, oof, it's like I don't know, man. It's like I can't keep track anymore, but it's flying as usual. But anyways, yeah, we're almost in the last little leg of Q2 soon, and we haven't got a rate cut yet, and the
Hmm.
market's still kind of, we don't know. We'll talk about kind of the some of the events coming in for the week, the macro data and all that. But one of them, I believe, is Jerome Powell speaking. But we'll get into that later. But for now, yeah, a big dip buy in the last 2 weeks has been a nice rally for those of you that are either holding your long positions, primarily tech, or were able to take advantage of maybe getting in during this kind of market small pullback. You should be sitting pretty right now. With that said, as the market comes right
What?
back to the 5250 area, uh once again, all-time high, resistance. You want to be a little bit more careful, right? This could very easily, because it's the second touch point, it's going to be almost a second touch point. Well, not really, but the second, I would say, clear touch point after March, April. It's going to be, we know it's a usually when we have a multiple resistance touch point, it's a little bit bearish. But if we break through that, then that flips to be bullish, right? So I'm going to repeat that. Well, we get another touch point, and most likely I wouldn't be surprised if we do. If it hits off against it and then we see a pullback, like not a pullback, but like a reversal or a little bit of a fade lower, that's a resistance, right? That's bearish. But if we see a persistent move, a strong bullish move, now remember that could be because of some of the earnings companies, releasing earnings. Even though the majority of earnings season is over, it could be that. It could be maybe, there's some macro data that comes out and it bolsters the market, and increases the chance of a rate cut, which the market's like. Then it could push right through the 5250 resistance all-time high area, and then that's bullish. So remember, keep that in mind. It's sort of a if this and that statement, right? It's not set in stone type of thing. So be malleable, be adjustable, and that break out of the 5250 is very much something that more momentum traders, more momentum style traders are going to look at. Um, momentum trading, it can work. It's, it's viable during certain market environments. Is not personally my, I would say, forte. Like it's I can do, but I just don't gravitate towards it as much. For those of you that are students, the master class, have been in elite, know me and my style, you will definitely be able to agree with that, right? But we'll see. If we see a rejection of the 5250, I will say I might be tempted to maybe get in some bearish positions.
Yeah, I mean, that's a really good point. We definitely came up here twice, tapped it multiple times, and weren't able to really make a big bullish move over this 5250 area. So it's going to be interesting to see what happens when we get there. And Riz alluded to some of the economics stuff that we're going to talk about here in a minute, and that definitely could have an effect on whether we break through that area or not. But let's take a look here at the breakdown for the S&P 500 and see what's been gaining the most for this rally. And you can see here, we've got some sectors that are holding up really strong right now. We've got communications being the top one, being up 13% on the year, and we ain't even halfway done yet. We've got utilities, financials, and energy all above, outperforming the S&P 500. And I don't think I can remember the last time I was able to say that utilities was outperforming the S&P 500. And if you remember, back in January, Riz and I talked about this. He said this was the one to watch, and so far he has been absolutely right. Just below the benchmark for the S&P 500, we've got tech, we've got consumer staples, healthcare, and consumer discretionary, all above the zero line, but just underperforming a bit. And then, of course, the one that's in the dumpster and has been for a while, real estate, really not doing so hot here. But seeing a very nice move back up here in tech, probably with a couple of those earnings that we mentioned earlier, kind
Yeah.
of driving that up. And then, yeah, utilities making a huge move here over the last couple of weeks.
Yeah, you're absolutely right. Uh, I was right, and it's great. I'm happy, but that kind of move, the fact how it worked out and how it's happened is wow. Like even I'm a bit surprised as to the level that it's gone because it was languishing. Remember how we'd be like, oh, real estate, and we've got utilities, and
Yep,
they're
always
just
in the
they're just
bottom. Yeah.
yeah, like it was like what, it's like all right. Um and here we are, right? So it goes to show you how certain sectors and certain thematic investments can really change the tide in not only the broader market and the index, but even in your portfolio. So this is why I always say sector allocation, different, you know, companies and different stocks in different industries and sector are important. You can't just have all semiconductors and then say, "Oh, I'm doing so amazing," when tech is doing great, but then getting slaughtered, when they pull back. So there's no point. You gotta have that right mix. And I'm a big, big believer in making sure I have, um, you know, the right allocation. There's no perfect in trading and investing, but if you can have a decent allocation to different sectors and rotate when needed, uh, that's gonna really, really help you. And that's we've seen that, like we've had periods in the market where nothing's happening, it's moving sideways and consolidating, but some of our holdings in certain sectors are doing well because we're generating dividends or they're pretty stable and they're not as volatile. So even when markets drop, they hold up well. And on the flip side, there's cases to be made when, you have a big pullback in certain things like tech, for example. Those could be opportunities when the market comes back up, those will outperform, right? So it's very important to know these concepts and rules, and it won't happen uh immediately. There's no like blueprint, there's no like do this and that specific because it's so variable, and it changes from market environment to market environment. Every year is different, but these are things you develop and learn by one, watching, seeing, and two, being part of something where you get to implement and see it done in action.
Absolutely. Couldn't have said it better myself. Obviously having that diversity in your portfolio can really insulate you, in times where, some sectors are up and some are down. And you can see that right now. We've been talking about utilities being below the zero line for, I feel like, years at this point. And we're really seeing a nice rally in it now. It really goes to show just having that diversity can definitely pay off. All right, let's take a look here at some of our asset classes. And we had been in a solid uptrend for oil for, well, let's see, pretty much since the end of last year, since December. We have been in this nice slow grind up on oil. But here over since about the beginning of April, early April, we have been seeing this really steady decline in oil and a big dip here, the last couple weeks going down below our trend line here. So I'm going to say that we have breached below the trend line pretty solidly. Came back, retested, rejected there, and as you can see, oil futures are going right now with the timer going on here since it is Sunday night when we're doing this recording. So that is definitely a big change of trend for oil. And then gold rather, starting to make a move. It looks like wants to make a move back towards the upside here after this parabolic move that we've been watching. A bit of a pullback, some consolidation, and now we seem to be moving back up again, closer towards this all-time high here, right around $2,400 an ounce for the shiny stuff. But this pullback in oil, Riz, I find this very interesting because, we're starting to go into the heavier oil months, right? The summer where people are going to be, taking road trips and stuff like that. What is causing this pullback here?
Yeah, so I would say it's quite surprising. I think could be some rotation out of energy as we see that, like some of the geopolitical stuff even that's been going on has been going on for months. It hasn't really dented supply as much. It hasn't really made too much of an impact. Yeah, we saw, oil run up to 85, but it didn't get anywhere near even the 95 or 100 level, right? So this could maybe be a little of some profit taking, a little bit of rotation out of commodities trading firms, maybe, but I don't think it's anything too concerning. The fact that we're still just a little bit below 80 is decent. It's not like we're all the way back around 60, 65, which I know some people would welcome because hopefully it would be reflected at the pump. But no bueno, at least for now that we're kind of in this 80, 85 zone. So not too bad.
Yeah, I would say definitely prices are fairly reasonable at this point. We have, of course, seen a move towards the upside with this move up in oil, but yeah, it definitely would be nice for oil to come down a little bit and, give us some relief at the pump at this point. But don't hold your breath. That's all I'm going to say. But we'll have to wait and see. Let's take a look here at the bond yields and the U.S. dollar. And so, last week we kind of talked about this. We were seeing this, this slow start to move up in the bond yields, and we started to come back down. And now we're mostly consolidating here. Kind of going into last week. So yeah, pretty much all this week the bond yields have done nothing. They really just kind of have been stagnant, flat, and really no change in there from the close from last week. And honestly, the same can be said for the US dollar as well. Still, nice and strong, still looking really good, but really just kind of consolidating at this point. So, Riz, are we just kind of like in a wait and see type market here at this point as far as, these indicators are concerned?
Yeah, bond markets continue to, if you think about it, we're still in an uptrend. They're just
Mhm.
consolidating as we get more color from the Fed, as we get closer into June and July, which I believe is going to be the next Fed meeting, if I'm not mistaken. So yeah, not surprising. We still see mortgage rates, which are a direct indicator of bond yields. They're still around 7.5 in the US, of course, for a 30-year fixed.
Yeah, definitely a lot going on with that those mortgage rates, and I think that is probably the one that affects people the most, if you have to ask me. So let's take a look here at those important dates in the market because there are a few, which is a big change from last week. Because last week we had like nothing, there was really nothing to talk about, but this week we've got it all. We've got the PPI, the Producer Price Index, month on month. We got Powell talking, and you know what I like to say when Powell talks, the market moves. And then, of course, Wednesday we've got the core inflation and the inflation rate, as well as retail sales, are going to be reported. Thursday we got building permits, and it looks like the following Sunday looks like Powell's going to be talking again. So Powell obviously on a speaking tour, but yeah, when Powell gets on the mic, market likes to move, Riz. So what is on the docket for these speeches? Do we know what he's going to be discussing?
No, obviously he's going to be talking about general policy. We don't know the details, but I haven't looked at kind of the agenda on this because ultimately my biggest concern is when he does I would say, official uh, rate decision, FOMC related stuff, and the press conferences after. But other than that, anytime he does speak, obviously the market still is aware, does care about it, and a lot of it more vague and more general. But if there is some of these keywords, that's what the market looks for, and same with the algos. If there's these keywords mentioned, you can bet we're going to see some volatility. So, as far as the specific agenda, I have no idea.
Fair enough, fair enough. I wouldn't really dive too deep into his his speech discussion either, or see if they're going to give out some type of heads up on what they're going to talk about. They probably just want him to just spit it out on the mic while he's there, which makes sense to me. Of course, the last couple inflation prints have come in a little hot. If those come in hot again, obviously that really doesn't bode so well for the current rate environment. I heard or inflation rates rather being described as sticky, and I thought that was a really good term because like it just sticks around. You can't get rid of it. It's like some of that industrial adhesive that you put tons and tons of chemical on. In this case, being increased interest rates, it just doesn't want to go away. And so obviously 3.5% is not 2% where they want it. That's going to be a big one Wednesday, and of course, yeah, like we're talking about Powell talking, that always moves the markets.
Absolutely. Absolutely. That's going to be a big one.
Yeah, that is for sure is. We're definitely going to keep an eye on that. Now, if you are here on the live webinar, go ahead and start posting your questions for Riz. But before we get there, let's take a look at the earnings calendar for this week because we've got a couple of names to report, but not as much as other weeks. So, probably really nothing going on Monday. If you're in these companies, good for you. I hope it works out for you, but not anything that we're too excited looking at here. Some bigger names here on Tuesday. Of course, Alibaba, always an interesting one to keep an eye on, as well as Home Depot for home improvement. Not a whole lot going on after the close that I'm seeing here. And honestly, before the open on Wednesday, Monday will report, which makes sense. I don't know why they wouldn't schedule that for Monday, but of course, they nailed that one. Cisco reporting after the close, definitely a bigger name there, so something to keep an eye on, but nothing too amazing. Walmart being the big name on Thursday, without question. Walmart's the big one there, and then AMAT, a company that we have traded before here in Elite, if you're a member. But Riz, is there anything here that I'm missing that you're going to be keeping an eye on?
No, Walmart and Home Depot are the big ones for me. Take-Two, AMAT, as you said, Take-Two, being a gaming company,
Oh
obviously,
yeah,
of Rockstar slash Grand Theft Auto fame. But yeah, it'll be interesting to see what their numbers are like. AMAT being a semiconductor. So, yeah, you touched on them. I feel for me personally, though, Walmart, Home Depot are the biggest ones that will kind of give us an indication on the retail, along with the home improvement sector.
absolutely. No, we'll definitely keep a look at that. So I am getting a couple questions coming in from our members. The first one here was sent to me privately. Wanted me to take a look at Humana here. Now, of course, we had, if I recall, we talked about this in the previous webinar where we did make a trade on this. We did really well for it, with it, excuse me. And we got Nikhil asking, is this a level to buy Humana at here? Given its performance over the last 3 to 6 months. He kind of wanted your thoughts on that, Riz. So where are you at with Humana here after this rather large sell-off to start the year?
Yeah, we did trade this a few weeks ago and got out. And yeah, definitely looks nice. The fact that it's kind of already had earnings, the fact that it's bounced up from that 300 level again, that established support. And we're the only thing that kind of concerns me is the fact that it's near the 340 kind of previous resistance
Inflection
level.
point. Yeah, inflection point there.
Yeah, yeah. But let's see. I think you know what, if you're considering it, I think it's not bad. I think if we get a breakout, it's nice, and the fact that it's um touched off that 300 level is nice.
Definitely a good sign for sure. Definitely pushing up nicely over the 50-day moving average here. A nice hold over that. But yeah, that 340 zone definitely seems to be somewhat significant, at least here in the short term. So keep an eye on that. And then he had one other question. Uh, I already know your answer to this, Riz, but I'll let you give it because I think it's going to be a good one. I'd like to know your thoughts on Chinese stocks and which ones would we like to hold for long term?
Yeah, none. None at all. Uh, yeah, zero Chinese stock holdings. The only Chinese stocks we will be trading are going to be from the shorting side, the downside. So essentially taking a trade, anticipating it to go down. Uh, Sha- Sean
It's a
just
good
in
one,
the
Sean.
in the comments. Sorry. But yeah, we're not going to be buying any Chinese stocks. So we're only going to be in a simple form just betting against them, so to speak. And of course, selectively, right? We're not going out there and saying, "Hey, it's Chinese, we're going to go short it." No, we have to be selective. Obviously, there's a whole playbook around it. I shared my trades in real time anytime I take a trade, whether it's Chinese shorts or not. But we will be keeping an eye on that. But to simply state, yeah, no Chinese companies are we looking to buy. It's just not worth it. There's far too many other opportunities, other stocks, for us to even bother.
Yeah, I'm kind of with you on that with Chinese stocks. All right, so Abhishek wants us to get our thoughts on Starbucks. I mean, who doesn't like overpriced coffee? I know one of our members, Glenn, will love that comment. So, thoughts on Starbucks went long with a starter at 74. Okay, well, you're looking pretty good so far. Thinking about adding to it for a profit target of 80 and beyond. So yeah, it looks like Starbucks got absolutely slaughtered post earnings here. It looks like they deserved it because they missed pretty hard. A 14, almost 15% miss on EPS. That's pretty significant. But they are rebounding. We had the sell off. We kind of found the floor, and we have the dip buyers coming in, kind of propping that back up and pushing Starbucks back up towards the upside. So, Riz, are you going to be going out to get your chai tea latte from Starbucks, or you looking to get it
No,
somewhere else?
no, I'm not going to be buying it from there. But from a stock standpoint,
Oh, okay.
you definitely made some sense to be able to get in. I didn't want to catch that knife personally because we've seen that this stock can languish a bit. It's not a large mover. It's not obviously a tech stock. There is some headwinds. There is some kind of headline risk, but like some negative sentiment. Apart from any of the financials or anything, just some boycotts and all that going on. So for me, this was something that I was kind of a bit hesitant on. It's good from a technical standpoint, looking nice. If it breaks out above the 77 area, I think that could be strong. I'm not saying it's going to fill the gap right back up, but I think you're good with the target of 80 if it breaks above that 77. As far as adding to it, yeah, you could add, depending on adding now. I would personally wait and see if it goes back above 77, and then you can decide maybe you want to add and then move your price target up a little bit, or maybe set a profit stop.
Yeah, definitely really sound advice there. And yeah, I don't think 80 is too aggressive. I feel like it's reasonable. It could reasonably happen. Like you're saying, we're not expecting a gap fill here, going back to 87 and a half or something like that. So I feel like that's a pretty reasonable thesis, if you ask me. All right. Sean wants us to take a look at Shop and AMAT. Let's start with Shop. We haven't talked about Shopify in a while. All right, so we got ourselves a good old Shopify here. Considering a long for Shop because of how beaten down it has been. Well, I mean, it got smacked around post earnings, but I wouldn't say that it had been beaten down for too long. But looks like they beat pretty handedly. Looks like they're selling off pretty handedly. Man, that's a kind of reminiscent of Starbucks here. I don't know if I want to try and catch that knife right now. Riz, what are your thoughts on this one?
Yeah, you nailed it. A bit of a knife catch. They didn't have good earnings at all. Yeah, they beat, but guidance is not good. These earnings numbers that we just see from revenue estimates and earnings estimates, and then whether they beat on that or not is fine. It's okay to look at, but it's not the full thing. It's not a big deal, a complete picture. And I want to make sure people are aware of that. So don't ever just look at just that and be like, all right, I'm buying or I'm selling or they did great. No, it depends on a multitude of things. This is just one part of factoring in the financials, right? So with that said, the guidance side of things was not good. It's something to be aware of, the fact that the stock. it was supposed to be, it had a lot of hype built up into it, especially, if you look back in 2023, it's recovered quite a bit. Definitely nowhere where it was back in 2021 levels, but it has recovered. And a lot of that had to do with expectations, right? But when it kind of misses those expectations, and that's when you see these big, 15 plus percent moves post earnings. So I would see if we can find a floor, right? Maybe 58 is that floor, maybe 56, but let's see if we can find a floor. We don't want to get in too early in a growth name like this because if we see the market also reject the resistance level, this could also trickle down further. The good thing is, from a technical standpoint, it is hitting that very, very near that uh, I would say oversold area, just at 29.2. So just that's kind of looking good. I would keep an eye on this, add this on watch, and then the moment you see like it's holding, then you can take a potential starter or entry.
Great idea on that one. All right, let's take a look at AMAT. We kind of talked about this earlier. Obviously, they have earnings coming up towards the end of the week here. I believe it was Thursday, right? Yep, Thursday after the close. Looks like AMAT is going to report. So it definitely looks like there's been some buying going in, going into earnings. A nice little kind of push back up here on AMAT. So let's see. Sean says on AMAT, he wants to capture some profits before earnings, may swing into it. All right, fair enough. I mean, if you're long on this and you're green, I don't know if I would hold through earnings. That's kind of a coin toss, if you ask me. But a coin toss, excuse me. And that's definitely risky. It can be profitable for you, but it's a risky play because we just don't know what's going to happen. That's really the truth of it. But Riz, what are your thoughts on AMAT here?
I agree. I agree completely. It's above the 50-day moving average, above the 200, well above the 200. We're going into earnings, assuming you're, like you said, you're in some profits. You want to be careful. You're hitting up that against that multiple resistance level at around that 214 area. Sure, earnings could be great and it could run up, or earnings could be great or bad or negative, and it could tank too. So I don't feel like this is one that you want to push the envelope on, especially where it's at from a valuation standpoint.
Yeah, just to clarify that he's looking to maybe, take a position here soon and see if there's going to be a run up into earnings and if he can capture that profit. That's a bit of a risky strategy if you ask me. Anything going up into earnings, things could sell off and then be bought back up, or just the opposite way around. People can start buying into it, expecting good earnings, and then, just get absolutely hammered when the report comes out. So, I mean, it's a valid strategy, Sean. I don't want to tell you that you're wrong, but it's tricky. I mean, Riz, what are your thoughts on that?
No, I agree. You can run it up, what is it, Wednesday after close or Thursday after
Thursday.
Thursday after close. You still got, you got 3, 4 days, 4 full days to decide. I personally, I would decide if you want to even hold it through, and then if you're gonna hold it through, then obviously you're gonna carry. But if you're confirmed that you're not gonna hold it through earnings, then don't worry about trying to see if you can run it up to any specific date. See where it's moving, see what's in front of you, and then compare that to where your target is and what you're making from a P&L standpoint, and your position in that sense. Remove the whole context around earnings, and then go based solely on how that trade is working for you.
Great, solid advice that anybody can use. So I'm not seeing any more questions. Riz, you kind of alluded to some macro data that was going on this week. What's going on with that? Kind of what is the state of the economy here going into, this little bit quieter earnings week, but a lot of catalysts going on. So, kind of what is your outlook here going into the end of Q2?
Yes, really for me, kind of status quo for now. I'm quite surprised that the macro data seems to be, I would say, as resilient as it can be, and that's what kind of has given the market a little bit more of a, I would say, some confidence in continuing the way it has, along with the fact that Powell and the rest of the Fed are just sort of navigating this. I would say, and very much in control of kind of the narrative, and the market is, I would say, just kind of leaning heavily bullish on that narrative. And of course that can change at any time. But so far, as the weeks continue, the months roll on, I feel like we're not at any kind of precipice at this point where, okay, we're gonna see rate cuts in the next meeting, or we're going to see unemployment spike crazy in the next one. We're not at those levels, and I don't think we'll be anytime just yet. It's again a slow burn. These macro events, they take time, months and months and months, right, and many quarters. So, it, for now, it's just more of a status quo. Uh, of course, we have Powell speaking, and we have the CPI print coming in. Um, but other than that, GDP still remains decent. We've got, economic numbers like retail sales. We've got all that kind of stuff just coming in. Uh, I wouldn't say great. I wouldn't say horrible either. So just relatively stable. And sometimes, you know, that's reasonable to expect. That's usually the norm. And not everything is either a bubble or a crash, right? So same applies to macro data. It's kind of the steady, easy does it type of scenario until something cracks or something starts taking shape, and then we got to start worrying.
Very well said. Very well said. So thank you again, Riz, for coming out tonight. It's always great to have your wisdom and your outlook on the market. Definitely something that you're not going to get anywhere else here on YouTube, if you ask me. So thanks again for coming out, buddy.
Pleasure is mine. Thank you.
Of course. And thank you to all of our elite members who are here live. Really appreciate each and every one of you. And as always, we'll see you in the market on Monday.